Good morning, traders. It is Friday, June the 14th. Taking a look at the charts, we've got the SP 500. And if we take a look at the left-hand chart here, the 30-minute trend chart, this chart here tells us when the bars are red, tells us that the trend from a technical standpoint and momentum standpoint is down. When we go orange, it's usually a trend reversal. And then we've gone into green bars, meaning the market is now into an uptrend. And the big question is this a tight little bull flag, and are we going to extend to the upside and push to new highs and really shake the market up? Or are we going to see it pull back in a deeper way, give us a three-wave correction to the downside, and then potentially try and go higher from there? Or is it going to go all the way back down to the lower end of the range? Those are the three options the market is going to do. And at this point, we have to stay bullish. Overall, the market is bullish. And we'll see if we end up getting a three-wave correction, A, B. We'll see if we get a three-wave back down, which would bring us down into the short-term kind of support level in the market from some previous price action back on the chart. And then from there, we could look at potentially getting into a long position. At this point, we're not really at an overbought market or oversold market condition yet. You can see this hashtag right here, this little green one. This is a level where if the market was to quickly drop into that level, that would be oversold, and we should see some type of it would give us a buy signal for a momentum type of bounce to the upside. We had that over here. This hashtag does move with the market. More or less, the market opened right just above our red hashtag over here, and it was a big gap to the upside, and it sold off ever since. So when we reach these levels, that's what we have to be aware of, that usually sellers step in because prices move too far too fast, and it usually recoils in the opposite direction. Taking a look over at the daily chart, we are into we've had this nice Fibonacci measured move bottom, which was a perfect 100% measured move from the low to the reaction high, gave us this perfect bottom in the market. We also had a cluster low here in our cycles, very similar to what unfolded over here, where we had a low target. We had a cluster of cycles. When everything is stretched in one direction, you get a cluster. We can see an impulse move, and the pink line here is more or less the overall trend in the market, the intermediate type trend. And we are back into an uptrend. So the big question is here, which way is the market going to go at this point? If the equities market starts to sell off and move back down, we're really going to see money pile into those safe haven plays. If it starts to extend and move higher, we need to keep our eye on what the metals are doing. If the metals actually continue to trade higher with stocks, that means money is actually really starting to shift out of equities, even though equities are going up, but they're moving into the safe haven. So that is usually the sign that the equities market is getting very close to a bull market top when the miners start to outperform the rest of the stock market. Now let's take a look over at bonds real quick. Bonds were trading up fairly significant this morning. They've pulled back down. Overall, money today is moving into the safe havens. We're seeing bonds trade higher, although they've given back their early gains here in the last half an hour. If we look over at gold, gold up nearly 1%, was up over 1% at one point. It's popping to the upside. If we take a look at silver, silver up 1% as well. Gold miners most likely up in pre-market as well. They were trading up at just over 32. So another pop up in the gold miners. Now we'll have to see what happens with the equities market. If stock market does start to rally, we're going to see probably the metals pull back. We've been talking about a consolidation. Now overall, we are bullish on the precious metals sector. We are long gold. We are long miners. And we're going to let them just kind of do their thing and hopefully work themselves higher. Now, what's interesting today is the US dollar is actually up fairly significant today. It's up over 1/4%. You can't see it on this ETF, but it's up nicely today, and we're seeing gold move up with it as well. So we're seeing money really moving into some of the safe havens, which is the US dollar currency. They're moving into gold, in metals, in miners, and the equities market is pulling back today. So all the things are slowly coming together, that money is starting to shift, not just to go into US equities, but they're starting to get picky and move into more of the more solid assets like metal, silver, and the precious metal miner stocks. Now, if we take a look over at, let's take a look over at Bitcoin. Bitcoin continuing to work itself up. It does have this bearish pattern. It's really getting to the upper end of this uh, uh, red bar, this inside bar day here. If we look at this big down bar, we are inside this bar, getting to the upper end of this range. I feel as though at any point here we could see a big drop in Bitcoin back to the lower end of this range. Usually the height of this bar is where the next bar would move. So if we're almost back up to the top end of this range, your one red bar would bring us right back down to the lower end, which would act as a support zone. If it breaks this level, then we're going to have obviously more or less a neckline. Whoops, wrong kind of tool. We're going to have a neckline right across here that if this is broken, the distance from the top of the head to the neckline in the middle here, that distance is usually the breakdown distance to the downside. And also we've got the Fibonacci extension on here where we could throw a high down to this low and up to this high, would give us that measured move as well. All these things, you draw them all on the chart and it gives you all kinds of, it gives you usually a box, a range where support should be found. So we've got that height, we've got this neckline height, which is from the top of the head to the neck. If you're to take that from this breakdown point, it's actually even a lower point, somewhere down into this range. And if this reverses down, so more or less we've got a downside box, pretty big downside box. We'd have different targets set on a trade. First target, second target, potentially third target somewhere down further here. You want to take money off as it falls into your favor because at any point it can rebound and just continue to work its way higher. Looking over at energies real quick, natural gas up 0.7%. Natural gas kind of bouncing here, trying to find a bottom. Nothing too exciting about natural gas at this point. Oil, obviously some pretty good price action over the last couple of weeks, but more so in the last two trading sessions. Big down day followed by big pop there yesterday on news with the tankers. It's continuing to carve out a bottom, and maybe we're going to get into something similar to what we saw back over here where the market has started to sell off with these big down days and high momentum move, and then it started to carve out a little bit of a bottom with a bounce and a consolidation, and then it ended up having a pretty big washout low after that. This could be very similar. We do have some big momentum moves to the downside. It's starting to chop around. Still looks bearish. At this point, it kind of needs to break this level here with a W formation. If it can break this, then it's going to have a quick pop to the upside. But at this point, it's still very similar to this area here where this is still seen as more or less a consolidation. If this breaks, we could really pick up speed to the downside. And really, if we were to throw a Fibonacci extension on there, let's just, actually, I'll zoom out a bit. If you throw a Fibonacci extension, we can get a downside target of this last, we can do a couple different legs here, from there to here. That would be one. So if we were to draw, actually I'll draw one more Fibonacci target. I like to draw several of them. This is the most recent leg to the downside. So you go from here to there to there. It gives us a downside box of the most current price targets. So this would be your target one range. If it drops into here, you'll want to look to take some profits. And then these are the 200% measured moves based on the big drop and the smaller drop with this flag formation starting to form. So these are your target areas if this starts to break down. And of course, this bottom one here, very significant level with this other bottom. If it got down there, we'd probably see a knee-jerk reaction bounce for at least an intraday tag. If it tagged it, we could get a one-day bounce. But from there, it could end up finding a more significant bottom and come all the way back up to the 50 range. So we'll see where things go. It's trying to put in a bottom. This would be the bottoming phase, and then it breaks to the upside. But if it continues to break down, the downward momentum shows much lower prices for crude. Anyways, I think that's about it for this morning, and I'll talk to you in a little bit. Bye-bye.